All right, we are back. Welcome to the Unpopular Playground, everybody. I'm Jen Lynn, and this is Debbie. Say hi. This is going to be a really fun one because I found a lot of history as to how insurance, the concept and the idea of insurance, came about to the modern concept of insurance today. And it dates back to all the way back to pre BCE, believe it or not. So I'm going to go through a brief history first, and then Debbie's going to introduce us into the world of insurance with some of her thoughts. Gotta have it, whether you want it or not. All
Well,
right.
it's
So
a necessity
going,
and
yeah.
you without it.
And a lot of insurance people procrastinate on it. Going back to procrastination. If you don't want help on that, you can go back to last month. Go back and look on our episode on procrastination. But it started with what's called bottomry contracts, and that was from pre BCE to the Middle Ages, and that's when merchants borrowed money to fund shipments of goods. And if something happened to the goods along the way, the debt was instantly forgiven on those loans. So those were called bottom rate contracts
We
back in the day when people had to ship things because we didn't have planes, trains, or automobiles. They just had boats and ships. As we're going from the third millennium into BCE, the people in China had the traders who distributed the cargo across multiple ships to mitigate the losses. Instead of taking all your goods and putting them all on one ship, if something happens to that ship, you're screwed. All your losses are there. So, what they would do is put some on a fleet. If you have a fleet of 20, they're putting some on this ship, some on this ship to diversify the risk. That whole concept about don't put all your eggs in one basket, that's pretty much how they did it. But instead of baskets, they were ships. And I thought that was kind of interesting
you don't lose everything.
because that one ship goes down.
Yeah.
Um, then you got ancient Greece and Rome from 500 BCE to 200 CE. They had what's called benevolent societies, which is kind of like your modern day charity. What they would do is help cover burial costs for families, and they would support the families of the deceased. That's kind of nice. I didn't know they had charity way back then. Then you have medieval to early modern times from the 14th to the 17th century. Italy had the true mariner insurance policies in Genoa. Instead of insuring your cars, they insured your cargo as you were going. They actually have policies to where they would insure your cargo, they would have bills of exchange, and this helped to spread the risk out. Almost like how the Chinese people did it back in the earlier day, they diversified their risk. And then, Debbie, I shared this with you a little bit earlier in our private discussion about the Lloyds of London in
Yeah.
1688. Edward Lloyd would meet in the coffee houses. He had a bunch of coffee houses. That was the hub of maritime insurance. That's where they would meet to write up their insurance policies for people who sailed on the seas. If they lost their cargo, they wouldn't have to worry about losing it. They would be reimbursed for the cargo that they sent abroad, which was kind of cool. And it still exists today as Lloyd's Market. So way back from 1688, it's still in business now. It's not a coffee house, but it's known as Lloyd's Market. A lot of attorneys and other things met in the coffee and tea houses, which I thought was kind of a fun fact. In modern 18th century, up until now, there was the Great Fire of London. So they started having fire insurance from 1666 when they had that big fires of London. They started thinking about people having fire insurance. And in 1718, 1700s to the 1800s, with the dawn of the Industrial Revolution, they started having workers' comp with the accidental insurance because you have those big machines that, the car industries and all of that. And that's when they had child labor too. You know, you work those machines, you don't really know them all that well. They're ripping off arms and legs, fires happening because there was no safety in the workplace. And so people would get insurance to do that. And then eventually in the 20th century, they were government backed. The government started regulating the insurance companies to protect the consumers so that you weren't getting screwed by the insurance company. Because a lot of times, what they do and what they still do today is, depending on who you have, if you go cheap, a lot of insurance companies, their only job is to try and deny as many claims
Mm.
as possible. So this is going to bring us into our considerations that Debbie's going to mention for the reason of why you have to have it and why you need to make sure to be judicial and very scrutinizing on who you get for insurance. And because you're young, they're going to try and take advantage of you, and they're going to think that, oh, well, they're young and stupid, we can just tell them this, and they're going to think that whatever we say is a great idea because I'm wise and wonderful. Don't trust anybody. You need to do your own research, and we're doing this whole month dedicated to this so that you know what to ask, and you will be able to go in like a big boy and big girl to get your own insurance and not get screwed over. Debbie?
Yes. And actually, when you walk in and you start hitting them with facts, it'll set them back a bit because they'll be like, whoa, this person is not going to be bowled over. Just like when a woman goes in and starts talking about cars and what they do and bits and parts and pieces. And they're like, oh, okay, she knows about cars, so we can't snowball her. First thing I wanted to mention is a thing called niche coverage. This is an insurance tailored to the specific, often unique risks and needs of a specialized market, industry, or demographic that a generic policy might not fully protect. Instead of a one size fits all approach, it provides customized solutions for a smaller focus group of clients, ensuring they are covered for risks unique to their situation, such as a specific industry, profession, or lifestyle. For nurses, doctors, pet insurance, renters insurance, for boats, for RVs, motorcycle, things that a regular insurance policy is not going to cover because there's certain things that you need for those specific things to be covered that they're not going to have on a general insurance policy. So this is something that you need to know. Don't think that because you have a homeowner's insurance policy, my dog is going to be covered under that. Wrong. So now, why is insurance important? Because it provides a financial safety net against unexpected events, protecting you, your family, and your assets from potentially devastating costs like medical bills, accidents, or property damage. By paying regular premiums, you transfer the risk of large unforeseen expenses to the insurance company, allowing you to recover more easily from a loss. It also safeguards your property, for example, home and car, from theft, damage, or loss. Life insurance gives your loved ones a financial cushion to help cover funeral expenses, maintain their way of living. It provides peace of mind and security knowing you have a safety net so you don't have to worry about the what ifs. It provides stability and support in times of need so you can recover from a loss without facing insurmountable debt or complete disruption of your life. You need auto insurance to comply with the law in most places.
A lot of these specialty insurances I have information on that I'll cover in the last episode
Okay.
as a follow up. And I know that next we're going to go heavy into auto insurance, and
Okay.
then renters insurance will be the following talk because I think those are probably the two most important for young people. But I think you should go ahead and continue. I don't have too many thoughts as of now. Thank you for asking.